Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video and currency breakdown. Now, before we get into this chart and breaking down this currency pair, we have to state that this video is for educational purposes only. This is not for financial advice. Okay, but we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and that can help put a little bit of extra money in your pocket, especially in these troubling times. Okay, so with that being said, let's go ahead and dive into the breaking down of this currency pair and this chart. Now, before we get into the technical analysis, let's discuss what is economically fundamentally happening with each respective currency, starting with the CAD. Okay, so around 8:30 Tuesday Eastern Time, just prior to the opening of the New York session, we did have some poor news come out about the CAD within its trade balance. It was actually lower than what they predicted it was going to be and lower than it was previously. So that's negative, some significant negative news that came out. Also, um we did have a drop in the oil prices due to the increase in oil supply and due to the relationship between the Canadian dollar, the traditional relationship between the Canadian dollar and the oil. This further weakened oil as well. Further weakened the Canadian dollar as well. So with the negative poor economic news that came out about the CAD yesterday, coinciding with the drop in the oil prices, which also further weakened the Canadian dollar as well. Okay. Now, on the other side of that, we did have a lot of positive news come out about the USD between 8:30 Eastern Time Tuesday to going into the New York trading session to around 10 o'clock. We did have some negative news, but we had more positive news than negative news. Then on top of that, around 4:30 Eastern Time throughout the latter part of the New York trading session, we did have that news that reported the increase in surplus of oil around the world, which brought down gas prices. Keep in mind that in this new geopolitical basically arena in which we're trading in, the gas prices are having a non-traditional effect on the US dollar. So anytime gas goes down, the US dollar gets stronger, and anytime gas goes up, the US dollar gets weaker. Okay. So with that being said, we are having a strengthening of the US dollar while we're having a weakening of the Canadian dollar. Okay. So now that we got those fundamentals out the way, let's discuss what's happening on the charts. Okay, so as we can see, price was coming down, all based off what was happening between Russia and Ukraine, and then the sanctions with the Russian oil catalyzed the drop even further. And then we've kind of been straight lining out, seeing that price has been trying to pick up. Then we'll have a bump down. Price tried to pick up. Now, what started to happen here was that we did have the beginning of the week an initial rising in the oil prices. We started at the week at $100 per barrel. Then we started to get up to about 104, 103, 104. And then when that news came out about the oil having more excess oil in the circulating supply around the world, we did start to see a pick up in price. And this was due to the CAD losing strength as the USD is gaining strength. And basically, we have our classic V formation. So what we're waiting for is the test to see a slightly push down. A slightly push down will be a good indicator that we're going to continue to go in the up direction, the long direction. So as long as current fundamentals still hold, we will see an uptake in price to either this area here or this area here before we start getting shaky and heading back doors down to the short side. But we may just stop here and continue to go towards our long position. But if the fundamentals start to change based off of oil, in which the Canadian dollar starts to gain strength and the USD starts to gain weakness, then what we will still continue to see is price slip down to this area here. Okay. But as long as current fundamentals still hold, what we're going to eventually see is a range here, and we're going to see a pickup in price here. So either this area here or possibly be as high as here before we start to see some retracement down. Okay, so once again, let's go over this. Classic V formation. Ranging is basically the retest that's happening. Then we'll have an initial push up to here, here, or possibly even here before we retrace back range and retrace back down. Now, if the retracement goes beyond this market structure, that means we're still in shaky ground. But if the retracement stops just before this market structure or right at the border of this market structure, then that's a pretty good sign indicating we're going to still continue to go towards the long position. Okay, but if fundamentals do switch over, in which the oil prices start to go up, which means gas start to go up, we'll start to see a strengthening of the CAD, a weakening of the USD, and we could see prices slip down even further towards the short position. Okay, hope that information was helpful for you guys. Happy trading.